Let's talk some home builders as the group has continued to make highs. Let's get the data on who's buying all those homes. Tian Liu is back with us, chief economist at Genworth Mortgage Insurance. Tian, always great to have you on the program. Looking forward to talking about the charts. Let's start with one that looks like it shows the highest level of first-time home buyers that we've seen in at least, 20, 25 years?
Exactly.
Wow.
It's a record year. And I think one of the main features of this housing market is that you are seeing very low levels of inventory in the market today. Between the last 12 months, we've lost about 500,000 units in terms of inventory. And so the important thing is to understand where did those 500,000 units of inventory went. And to understand that, you have to understand there are different types of buyers, as you mentioned earlier. There are first-time home buyers, there are repeat buyers, there are investors, there are buyers looking for second homes. And if you look at the number of first-time home buyers, they differ from the other buyer groups because when they buy a unit, they do not have a unit to sell. So that means when a first-time home buyer comes into the housing market, they actually take one unit of inventory off the market, whereas an existing home buyer does not take a unit of inventory off the market. So that's the difference.
What's interesting is when we think about that difference, right, where if you're reselling a home versus building a new one, obviously the demand for the home builders has been huge because of this.
Yes.
But what I'm trying to figure out, Tian, is how come they haven't been able to appropriately kind of gauge that level of demand? I mean, hasn't this now been building momentum for the better part of a year at least, yet we still hear stories of a lack of supply? Do you see that?
We do see lack of supply, but you also have to realize that pre-pandemic, housing starts have been increasing by about 50,000 units a year. And in the last 12 months, it increased by about 200,000 units. So within 1 year, we actually added about 4 to 5 years of housing supply in the market. And that's why you are seeing record lumber price. That's why you are seeing record building material price in the market. And I think that's why, home builders are struggling because they are increasing production, but they are also in the process driving up prices for materials, for land.
When we look at the home sales, we were just looking at the annual home sales, looking at the quarterly numbers annualized. We're on pace for another big quarter coming up. And is there any kind of historical seasonality that applies for analysis, Tian, in terms of trying to divine maybe what's coming down the pike? I know a lot of times housing has seasonality. We did see some slowness in the numbers last month after the cold weather, but there are other factors, right? There's been the kind of migration out of the city factor. Has that been now fully reflected in these numbers? If we're getting back to a post-COVID environment, what is your view here on what we should expect as things do get somewhat back to normal, and it's happening ahead of the spring and summer, when I would generally think, these are decent seasonal periods for housing?
That's true. There is a very profound seasonality in the housing market. Between February and April, May, you have typically a 60% increase in terms of the level of housing market activity. And you see that, for example, in Mortgage Bankers Association's purchase applications index. And what we have seen so far is that a very healthy purchase applications going into the spring selling season.
Okay, so trends that seem stable. We know interest rates are still low even after the move that we've had, but they're starting to pick up a little bit of pace. Is there any reflection of that in the mortgage market, or is there still a decent enough disconnect? I mean, we've seen the 10-year yield and the 30-year yield move pretty notably over the last 6 months, but is that getting in the way at all of the momentum for the mortgage rate?
I think in the fourth quarter, when the 10-year Treasury started to go up, what has happened since that period is that the spread between 30-year mortgage rate and the 10-year Treasury compressed. So that's a little bit of pain for mortgage lenders. But I think for the housing market, what it means is that the going into the first quarter, we still see record level of mortgage rate. So I think in terms of housing affordability, I think interest rate is very, very supportive. And I think if you look back during the 2012 to 2019 period, the average mortgage rate is around 4%. And today we are sitting at low 3%. So that is a very positive backdrop for the housing market.
Now, because of those low rates, that's facilitated home buying, obviously, given the cheapness at which one can take out a mortgage. The percentage of sales happening with a low down payment is generally still fairly elevated historically, yes?
I think when we look at first-time home buyers market, they are definitely very, very dependent on low down payment mortgage. Around 80% of them use some form of low down payment mortgage that could be loans backed by the PMI, or it could be an FHA loan. Those two segments have historically played the biggest product that first-time home buyers use. So they are dependent on low down payment mortgage. But I think what we are seeing today is that a very high quality group of first-time home buyers coming into the market, and I think that's a very significant positive for the market.
Okay, always love the numbers here. Trends still intact, it seems, Tian. It's the message, one continuing to be positive for the home building space. Appreciate you joining us. Thanks as always.
Glad to be on your show.
Thank you. Tian Liu, Chief Economist at Genworth Mortgage Insurance. The home builders down about 1% today after making new highs last week. We've also got yields a little bit higher today, too.